All right, welcome everybody to the first joint webinar between Forrester and 7Learnings. Today we're discussing e-commerce up until 2030, and I'm really looking forward to this discussion today. I think it's safe to say that there's really more change coming in the next 3 to 4 years than what we have seen in the last 10 years. So it's very volatile times about agentic commerce, competition, but also about tariffs. And now lately the oil shock. So a lot of things to discuss today. Maybe a short introduction in the beginning. I'm Felix, one of the founders of 7Learnings. I worked for Zalando before, where I was heading the optimizations team for price optimization. And I'm now heading the product team here at 7Learnings, and I'm a CEO as well. And joining me is Sucharita from Forrester. Maybe a quick introduction from your end.
Yeah, hi everyone. Thank you all for joining me. I'm Sucharita Kodali. I'm an analyst that focuses on retail. We call it digital business at Forrester, but I worked with retailers, with brands, brand manufacturers across a variety of different sectors, high-end commodities, CPG, toys, apparel, everything in between. So I'm looking forward to this conversation with Felix, and happy to all of you from New York and Finland and all over the world, I see.
Cool. So today, we start with a quick introduction, also some technical notes from my end. Then there will be about 20 minutes of a market analysis from Forrester. There's a separate room for questions. You can't unmute yourself because there's simply too many people for this, but please, I'll explain in a second how to ask questions. Please continuously ask questions as they come up. We will answer them then in this period, in 25 minutes. And after that, there's a second session. I will develop the retailer response strategy that is responding to what we are seeing in the market. There will be a separate question time for that. But again, you can still ask the questions as we are speaking. I think that would be best. So the key takeaways maybe today, yeah. So what are you getting out of this webinar? Is really getting some market foresight. What is global e-commerce going to look like in 2030? What is the share developing to? But also how is it going to change fundamentally? Then what is a roadmap for conversational commerce? Again, there's a lot of things happening today, and I think you should be smarter afterwards, like as to what to expect, how this will develop. And then the third point would be on the volatility. Like, is there anything you can do as a retailer or as a brand to respond to tariff volatility? How can AI help you respond to that? How could it look like? And then, I would also love to introduce what I would call predictive decision making, and how that can help us maximize profit. So those are the 4 things that we're covering today. Again, for the questions, if you see, there's a little tab down there, which should say questions. So please really, let's do this as interactive as possible. It's just more fun for us if we get more questions. I will read the questions. You don't have to read them. You just have to put the questions and I will read them for you. And then we're trying to answer those. And again, you can really just right away, as they come up, ask the questions. If you didn't get any answers yet, or you're too shy to ask the questions in there, you can also write us, of course, marketing@7learnings.com. And I think we're good to go.
All right. Well, great. Well, I will take over at this point for the next 20 minutes or so. And again, for anybody who doesn't know Forrester is a technology research company. It's headquartered in Cambridge, Massachusetts. I'm one of the remote workers. I've been a remote worker for almost the 20 years that I've been at Forrester, and was in the retail industry, working at a variety of different companies across different sectors before that. So one of the things on the next slide that Forrester does is that we do a lot of forecasting, and you don't have to worry about the little font here. You can, I think, probably increase the size of your screen, but I will also give everybody access to these slides. I'll have my email at the end, and you can also get the slides. You will most likely get them from 7Learnings as well. But one of the things that Forrester does is that we have retail forecasts. We have a lot of forecasts for technology, but I focus specifically on the retail industry forecast. So over the next several years, when we are looking at how is retail going to grow in different parts of the world, we have 3 different regions here. We have the US and China, which are the biggest regions, but then we also aggregate everything else into rest of world. Rest of world, the largest rest of world markets are, of course, the UK, Germany, Japan, and then it gets fragmented and is much smaller. You have high growth regions like Latin America featured in here as well. But what we essentially see is that even when you look at it from a compound annual growth rate standpoint, virtually every region in the world is growing, and it ranges from a mid single figure to a high single figure level. And when we look at where we expect retail to be in the next several years, it's nearly a $250 billion, which means that it's about a quarter of the world's entire GDP. So retail is not only growing, but kind of it continues to be a significant part of the driver of the world's economy. So on the next slide, what's probably even more useful to all of us on this call is, well, where does e-commerce land, and what is the e-commerce piece of all of this? And that's, again, the statistics that you see here. At the bottom, we have essentially the online, and then the top are the offline. So and in the offline element is also what we would consider the cross-channel piece. So we have another layer. It's not just the e-com figures that we talk about. We have online influenced offline sales. I didn't showcase it in this chart, but it's in the light green. But in any case, we have e-commerce being at this point, kind of, again, almost like a quarter to, depending on the sector that we're talking about, sometimes even larger than that as a percent of overall retail. So now let me take it a little bit deeper and do another layer on the next slide. And that talks about the specific regions of the world. So I'd mentioned to you that China and the US are not only the largest retail markets, they are amongst the biggest e-commerce markets. And then you have other regions of the world too: India, Japan, Germany, and so on. So what you have here on this list are the 10 largest markets that Forrester forecasts. The total retail size in that little line chart. The next column is e-commerce penetration. The 2 highest penetrated regions of the world are China, and actually the UK is very highly penetrated. And part of that is because the UK has had a strong online grocery business for pretty much since its inception. And much of that is tied to density of the population, where a much larger percent of the population is in the population center versus some of the more rural kind of regions of the world, like or places that have more rural regions, like the US. And then the last column, which is always of interest to anybody in the e-commerce space, is what percent of that e-commerce is actually transacted on marketplaces. And the most penetrated online marketplace region in the world is of course China. And if you've done any business in China, it is impossible to, of course, do any sales without having some type of a relationship with the Tmalls or the Taobaos or the JDs, all of which are marketplaces these days, even including like Pinduoduo and others. The US is about a third marketplaces, of course, largely bolstered by Amazon, which I think in our last forecast was like 3/4 of all e-commerce. And then some of those numbers will vary. Some regions of the world, like Mexico, are even higher, and other regions like Russia are even lower. So we go fairly in depth there, but I won't on this call. On the next slide, I also just want to point out some of the macro factors, because one of the important things that I hope you take away is, kind of where all of this leads to ultimately pricing and pricing challenges. So we have a world where retail is growing, where more of that retail is coming from e-commerce, and a lot of that is actually coming through very competitive forces like for instance marketplaces and a lot of shopping comparison. And what we also see is a world where macro factors at this moment in time are relatively strong. The two macro indicators, economic indicators that I look at that I think are useful to consider for the state of how the world is doing are unemployment rates. And in almost every major country in the world, you have unemployment rates being less than 10%. Which is usually, kind of that double-digit unemployment is where things tip in a negative way. The other part is GDP growth. And in almost every region of the world, GDP is still positive. And it's not a great number, but as long as it's positive, that typically means that a nation is not in a recession. So with those positive things, on the next slide, I also want to, we can go to the next slide. The piece that I wanted to just also keep in mind is that we're also in a period of tremendous uncertainty. And arguably, there is as much, if not more, uncertainty now than there was at the beginning of the pandemic. And the reason I say that is that, kind of at the beginning of the pandemic, there was relatively fast fiscal stimulus from governments that quickly brought the economies of the world back to stability. Whereas now we have a number of geopolitical challenges, whether it is related to tariffs, which Felix is going to talk about, or even other geopolitical challenges. We have a number of wars happening in different regions of the world. We have high inflation rates. We have and high interest rates. We also have issues related to election integrity, which of course destabilizes democracies. And the worst, which is in the bottom right-hand chart, is that consumer confidence is at some of the lowest rates it's been in decades. We look at some of this data dating back to the 1950s, and we have worse consumer confidence now than we even did during, for instance, kind of oil crises and the Cold War and all sorts of other major global events that have happened in decades, kind of after World War II. On the next slide.
1 second.
I also want to point out some of the challenges related to supply chains. One of the things that we realized in the fallout from the pandemic was that it was extremely risky to have any part of your supply chain in one particular region of the world, because that not only made you vulnerable to major shocks, but it absolutely also, kind of makes you vulnerable from a geopolitical standpoint. Of course, kind of the Europeans realized this when Russia invaded Ukraine. We saw that, kind of all sorts of issues related to challenges with being too concentrated in one region of the world. One of the outcomes of that has, of course, been much greater diversity in where companies are actually manufacturing goods. That has pulled manufacturing to different regions of the world. We just saw some data that Apple now manufactures like a quarter of its iPhones in India. So So there are different pockets and regions of the world that you now see growing and being able to absorb some of these differences. And kind of a lot of that is part of the reason that you have so many regions of the world also focusing on energy independence and looking for alternative sources of energy, so that they're not dependent on regions that may be potentially hostile states. The fallout from all of that, though, is that, kind of in the course of diversifying yourself, you often end up with a lot of price volatility, and you often end up with potentially higher cost regions where you have partners in trade versus, kind of those lowest cost regions that we may have had in periods of economic stability and, kind of dependence on one region of the world, maybe for one item or one type of an input. On the next slide, I want to also share that even though we have a scenario where kind of prices are potentially higher because you have kind of higher costs of doing business, you have more diversified supply chains, you may end up with shocks where things may take longer to get from point A to point B, the consumer still values price and value above all else. Forrester collects a lot of different data points from different shoppers, and this is data from 3 regions of the world for different kinds of categories. And as you'll see, more than half of consumers almost everywhere in the world are they consider price one of the biggest factors. It's actually the most important factor in how they decide to purchase what they purchase. And it is, even for an online transaction, that's the single biggest determinant of why a shopper would choose to purchase at retailer A versus retailer B. So next slide. Knowing that we're in a world where consumers are extremely price focused, we also have essentially this new type of way to discover some of those best prices, or ways to kind of cut through the clutter of all of the items and all of the opportunities and options that may be there through answer engine optimization. And what we have essentially seen is that because discovery continues to be so challenged in e-commerce, where even in spite of all of the efforts of search engines, in spite of all of the personalization efforts around the world and in different commerce industries, consumers still don't necessarily always find the best product. They're not always confident that they are getting the best offer. And you now have answer engines promising, kind of to present more offers that consumers may not have seen before. And that, of course, is where retailers are interested and excited about potentially this new marketing approach to matching consumer demand with the supply of the products that are out there. Now, another on the next slide, an adjunct of some of these answer engines and the AEO world is a lot of talk about essentially agentic commerce and this broader theme of agentic AI and how agents can sit on top of some of these answer engines to deliver greater value for shoppers that may have needs. So I want to actually step back because there's a lot of myth around what agentic actually is. On the next slide, I will share with you Forrester's actually formal definition. Now, this is a lot of words, but just to kind of summarize it, it is essentially foundation models, rules, architectures. It can be a number of things that enable software. And here's the operative pieces. It enables flexible planning and the resolution of goals by taking action in an environment. And the key part is also with autonomy, increasing levels of autonomy. So the operative pieces being that things act on their own and they make decisions and are constantly improving and recognizing, kind of when they have to course correct. On the next slide, I will share with you probably the most obvious example of an agentic solution that we're probably all familiar with in some way, shape, or form, and that is driverless cars, because they act autonomously and they make decisions in real time based on their environment. A lot of what we are talking about in retail now is not actually truly agentic. Agentic, like we said, acts autonomously, and a lot of retailers aren't necessarily completely comfortable with a lot being completely agentic, because they want to have some degree of kind of oversight on things. Pricing, however, is one of those exceptions. It's one of those exceptions that not only has great proven ROI, but is actually something that makes sense in an autonomous environment where you're reacting to, kind of other elements that may be within your environment. So on the next slide, some of the things that I think are also important to recognize, and part of the misnomers around kind of agents and agentic, is that people think that it's kind of easily fits into one specific box. And what I always like to point out is that kind of if we use the driverless car as an example of an agentic solution, and we go and like look at a chart of like everything that is AI and all of the different kind of applications that we may be familiar with in AI, whether it's things like camera vision or robotics or kind of fraud detection, even recognition. Kind of when I look at all of the technologies that have gone into making a driverless car as what it is and able to actually get successfully from point A to point B, it's not one simple application within AI. It is an amalgamation of many of the things that are here on this chart. And the reason that I point that out is because when we talk about agentic AI, it's not one single thing. It is, kind of often kind of a formula that has many, many different aspects and different parts of AI solutions all in one. And kind of the only reason that I say that is that it is complex. It involves different inputs. It doesn't fit into a single box, and I think that kind of it is often built on a lot of fundamentals and a lot of pieces of fundamentals that we've been gradually building over many decades. So it's not just something that magically came out of nowhere and is this new kind of solution that kind of is its own thing. It often is a solution that's been built on many things that we have improved and mastered over a number of years. So the next slide, I just want to also call out, kind of looping it back to answer engines and, kind of agents, and where are we now with respect to all of the options that are ahead of us. So when I step back and I look at, kind of how do shoppers actually discover goods, for the most part, it is still largely through Google and paid search. And for any number of reasons, that's become an imperfect way to find goods. It's a tax that all merchants have to pay to Google. But what we've also seen is that the emergence of answer engines and the emergence of social media have both exposed to consumers the imperfection of Google search and the imperfection of traditional. And what it has done is it's exposed to shoppers new ways to discover new types of product. And we see that in some of the data here, which is data over a couple of different time periods in 2025, when we were looking at how do shoppers actually find content? How are they finding goods that they may be looking for sale? And what you see here is that things like ChatGPT and Instagram are at par with one another. They're still behind Google. And by the way, we don't break out Gemini in this, but kind of they're kind of these other ways that shoppers are discovering products. And the point there is really that there are new things that consumers are looking for. There are new places and formats that consumers are looking to find these items. When you layer on things like they're also looking for items at the best value, items that have the best price for whatever it is they're looking for, there are new levers that marketers are able to showcase and demonstrate to those consumers. And then you also layer on, kind of the opportunity and the possibility of agents being able to take additional steps in the process, adding items to cart, being able to configure things that shoppers may not have had, being able to set alerts if an item may be out of stock, kind of discovering, kind of the best value for anything, or even, kind of uncovering what may be the right price for an item. These are all things that we now see as potentially the future. So
we have some questions already.
Go ahead.
There? Yeah, there's
Let's
one.
jump in. That was my last slide.
Yeah, with answering machines, do you primarily mean LLMs like ChatGPT or Gemini? And by the way, maybe for the rest of you, if the questions tab isn't working for you, you can also use the chat. We will also check that one. Thank you.
So which LLMs do I personally use, or
I think it's more like with this idea of answering machines that you mentioned in your slide here. Like which ones are you answer engines? Yeah. What exactly? I think that's the question. What are you meaning with that? Like what are those?
Yeah, ChatGPT, Claude, Gemini, Perplexity. Yeah, those primarily.
Okay. And one other question was: is the speed of delivery less important now to the consumers than recently? Do you see that?
I think that depends on where in the world you're asking the question. Interestingly, in the United States, speed of delivery doesn't really matter as much. I mean, people want they want price. They want the cheapest price. They're willing to have slower delivery in order to get the cheapest price. Of course, if you can get fast delivery and a cheap price, everybody will take it. And that typically tends to happen in developing regions of the world where the cost of labor is the lowest, or where you can sometimes have incredibly dense delivery patterns. Like a lot of the quick commerce players still have, kind of options because they're able to get to delivery density. But even the quick commerce was largely subsidized by venture capital. And I think a lot of those businesses have gone away. So, kind of the idea of speed isn't as big of a deal. However, what we do see is transparency being really important. So if you can't get me my item quickly, tell me exactly when you're going to get it to me so that I can see that.
Okay. I was also there was one question on like there's a difference on the markets between like China and US, and that was quite drastic in terms of polarization. Do you see these markets converge in terms of like how many people are using online versus offline, or do you think there will always be these differences?
I think that there'll always be differences. I mean, China is such a different region of the world. It's essentially a totalitarian regime, and kind of their ability to see it. I always say, everybody always talks about like, kind of television commerce and live commerce is so popular in China, and everywhere else in the world should have live commerce. Well, my argument for why live commerce is really as popular in China as it is that there's not as much alternative entertainment options there as there are in other regions of the world. And, kind of when you look at other regions of the world, there are so many other things and so many other ways to access entertainment content. So, kind of people don't have as much time to even do live shopping in other parts of the world. Whereas there, I think their primary, kind of a form of entertainment is live shopping. And, kind of that was true in a region like the United States back in the 1980s, when we too didn't have a lot of entertainment options, and, kind of, 10% of all viewers would go look at QVC or some other home shopping network.
Okay, cool. I think it's time I will move on. But if there's more questions for you, please keep them coming as well. We have some time in the end as well. So I'll take over now. Yeah, so I'll talk about how e-commerce is changing until 2030, less from a data perspective, more like from I would say visionary perspective. And then I think the most important part is then the question, how can you respond? Of course, that's if you think that this is the vision, then how can we respond? And I want to, before we really jump to the future, let's go back 3 million years maybe and really think about like what has happened to jobs before. Yeah, because it's not the first time that our work world is changing and there is a revolution. We had specializations before, so yeah, people were doing the hunting who did well at hunting, and others were doing farming. You had central organizations coming up for building the pyramids, then decentral organizations in England, like the first companies, and then the Industrial Revolution 200 years ago. And today, I would formulate it as the automation of decisions. For me, it's a bit clearer as a definition of what is happening today. And I think on retail, it's affecting the retailers, but it's also affecting the shopper itself. And I think I want to start with the shopper. Yeah, so the shopper will increasingly automate the decision what to shop. And that's what we're seeing today already in the LLMs. That's how I would formulate it, at least. So from going from like searching individual products or flipping through lists or websites, they're more and more looking for more efficient ways of shopping that are more convenient. So there's an interface shift. Yeah? So this lady, she basically doesn't even have to pick up the phone necessarily. She just maybe talks and says, okay, I want to shop something. And then that's the starting point. You know? So, and I think today, and this is the tricky part, in Europe, this isn't even live. We know it's live in the US, where you can actually conversationally shop using Gemini, for example. But I do see that this is going to be very convenient. So imagine you have the opportunity with Siri to say, okay, I just want to buy a certain product. And then Zero can kind of walk you through the consulting process of what to buy, what are the options, and you do not even have to type. You don't have to use the mouse or the keyboard. This is, again, it's not possible today, but the technology that we need for this is already there. You know? So LLMs are doing a good job at talking to us and understanding what we want, and therefore it will be there at some point. And I think this is evident, and for me, it's not uncertain. It's not uncertain anymore. we can discuss like if it will be 20% market share or if it's going to be higher. That we don't know, but it will be there. And then if that's coming, then the question is a bit how we react on that. But I would say that there is going to be significant market share. I wouldn't even call it LLM shopping or agentic shopping. I don't like all these terms. I think the fact is that is it conversational shopping where you, instead of using an app or like a website, where you talk to the machine and by talking, buy something in the end. That's kind of the big change, I think. And that's what I think will be at 20%. So let's see how this would work. So this could be the lady asking, hey, I still need an outfit for the next wedding. She's reading a book, and maybe she was reading about a dress or so, and then she thinks about, okay, I need to buy something, right? And then the phone is just maybe next to her somewhere, and Gemini checks, okay, what is she actually interested in? Maybe she even knows what she's reading. She detects when to buy it or when it has to be shipped. She knows the preference in terms of brands and the context because she knows, okay, Gemini knows her contacts and yeah, what kind of wedding it's going to be. And there could also be some sort of conversation going on, like, okay, what is it really, like, maybe what color do you want, or that kind of probing questions that make the intent clearer. But I think we are all not in doubt that it is already possible with LLMs to come up with the intent, right? So you can use LLMs to come up with the intent. You understand what people actually want to buy. They're doing a good job at this already. The next step is basically then what happens with this intent. So when you know what people want to buy, then you need kind of a big database. And I think from my perspective, this is not going to be an LLMs itself. This will be a different software. Google has this already live. Yeah, this is called Shopping Graph. This is kind of a gigantic database that constantly updates what products are out there, who is selling them, at what price, and when can they deliver it. They do this through the Merchant Center, and most of you probably know that. And then you have something, right, like a machine-readable intent, which you can match with the Shopping Graph. That also contains reviews and tests and a lot more data that you could yourself not even manually look at. And this could actually come up then with a list of products that are fulfilling the intent. That's the next step. And that can be delivered and have a certain price. As a next step, I would say that there will be predictions in between. Again, here, this is not something that the LLM will do. Again, it's not live. It doesn't exist at the moment. But it makes sense to me that there is a step in between that tells the consumer, hey, I found these 3 products, and I think the 3 of them are very good because why? Yeah, that's the big question. You still need to explain why they are good and make a prediction on something like personal fit. It's not something that you will have in your database, the personal fit. It will be something you need to do for each consumer. Also, the environmental impact, that's going to depend on the consumer, where they live, for example. That is not yet there, but I think it will be developed because consumers want to understand why a certain product was selected. And then there would be recommendations, I would imagine. So the Gemini would say, okay, do you actually want to buy this product? And I think for something like a dress, the consumer would still say, yes, I want to buy that. But she's still sitting there, right? And she didn't look at the website. She didn't actually scroll through thousands of products. So there's still, although this is not fully automated, I would say, it's still to a large extent very different to what people are doing today. Maybe to summarize, yeah, the consumer, one other thing is that the consumer will be a lot older. The interface will switch, so there will be a lot more voice and smart glasses because people are lazy and like convenient. Yeah, they want this to be easy, and it now is possible to make it easy and to get rid of this interface of mouse and keyboard. Consumer access will change a lot. The 75% is like through assistance in checking. And I think our prediction for 2030 was 20, 25, 30%, something like this. The intent will be refined by conversations. So this is where LLMs are really strong. But then there will be also databases, what I call Shopping Graph here, and also predictions, which are not necessarily LLM-based. Also because you don't want to change your recommendation every day, yeah, because they're not deterministic. And I would also think that there's some sort of optimization happening based on personal predictions and utility functions, which are then improved. Yeah, so I don't expect that when I say a lot of the shopping will go through voice interface, that all of this will be fully automated. But even if it's human approved, it still means that the consumer sees a lot less products in this process. Yeah? So overall, still a lot of change. So the question is like how you as a retailer, how you can respond to that. And I think the logical response for me is to also automate decisions on your end, yeah? Because yeah, the consumer is basically automating their decisions, or like at least parts of it. And you can do the same. Yeah? There's a lot of decisions on your side which you can still improve. Of course, you can try to build this in-house. The other option is kind of to send your raw data, constraints, targets, what you want to achieve actually, to a software provider, and then they provide you with decisions back. And again, here, there could be an approval process, like for the lady, you're getting a recommendation, and then you say yes or no. But still much easier than doing everything on your own in terms of rule-based pricing or marketing or manually coming up with a Black Friday offer. Yeah, so there will be a lot more of that, I think, where you're shipping raw data and your targets to a software provider, and that software provider proposes you something, and then you say, yes, I want to do it, or no. One of the most interesting parts for me is purchase decision. Yeah, today, at least in fashion, there's a lot of purchase decisions are done like very, very early on. And it's yeah, it's difficult to do that decision well, and it's also very difficult to automate that decision. So if there is a chance to do these purchasing decisions more short term, produce like in smaller lots and closer to the market, that will help the automation. I know it's also more expensive, but it's still something that is true. Yeah. Automation doesn't work well if it's kind of 9 months in advance. That's just the way it is. Yeah, and if you do it short term, you can use a lot more real time data, right? So you can say, oh, the summer is cold this year, so I'm buying more colder summer products than last year. This you cannot do 9 months in advance, yeah? And that's the advantage if you have that set up. I think there could also be like more localization of products, especially if you have these LLMs, because the consumer is hooked up to the LLMs and produces a lot of data. And with these conversations that we just described, the LLMs will have a lot of data on what the consumer actually wants to buy. Something that you don't see today in your website, right? The website is just used like with filters, which are already there, but the consumer now is like a lot more speaking about what they really want. And you can use that data, or should try to use that data to make products that people actually want, and also kind of produce new products with more certainty. I brought one example that is a bit striking. Is that, for example, let's say you have a consumer asking for a red high security race helmet under 150 euros. The problem with this is that these filters are going to be very, very brutal, yeah? Because this will be translated into kind of like mathematical filters. So the color has to be red. If your product doesn't show to be red, then it won't be shown. Yeah? The price needs to be below 150, otherwise it will not be visible at all. And then also security rating has to be there. So I think where today all products get some sort of clicks or some amount of clicks, in the future, that's not so easy anymore. Consumers see a lot less products in the future, and then you need to understand a lot more what filters are actually used in order to make sure that you are in that filtering. Of course, for the question of price, you can still react on that, and if you lower your price, you will get more visibility. That's still going to be true, but there will be a big shift in visibility for low-performing products or products which are not purchased the right way. It's much harder to sell them off in the future. So you need to become much better in predictions for ordering, for sure. Then, I mean, one other thing that also affects the ordering is kind of these non-linear shocks like tariffs. So it's like if you have like tariffs are a complicated thing, and they really keep changing all the time at the moment. So if you have a system that comes up with the price in a static way based on some rules, that will be broken by tariffs. Also now the oil shock, I think, is another example where you see that you need to become more flexible with changing your smaller product decisions based on external shocks like tariffs, right? And the way, and this is maybe where I start explaining a bit what I mean with prediction-based decisions. So you can see that for a product, you can see, okay, what is my prediction for profit for tomorrow for this product if you sell it at 10 euros? What if you sell it at 12 euros, right? And if the tariff is changing, then this prediction will change. And that will change the recommendation, but it doesn't. You don't have to change the rule for that. Yeah. Or another example, the return rate is changing, or the commission cost is changing on Amazon, and that's even maybe price based. Yeah. All of that can be predicted, and all of these things can be considered in a prediction instead of a rule that you have to cover yourself as a human. And that builds really this adaptation. Then if the next tariff is coming, you are kind of predicting this change, the impact on the revenue and on the profit, and then you make the rational decision what you should be doing. And there is no meetings needed even for that. This update comes in automatically, basically, into the system once you have set it up. And I think it's really a big relief if you have this there. I have an example. This is a snapshot of our tool, how it looks like, and that's how it looks like for pricing, right? So a predictive system would be able to give you a prediction for where you are today. This means you are logging in, you see your revenue and profit prediction for the current price, if you're not changing anything, right? And then you can say, okay, I'm making like 4.5 million turnover and 1 million in profit. And then you can change, right? And you can see you can then make a target-based change. So you can say, I want to grow faster, more revenue and maybe less profit. Or you want to go the other direction. You want to have less revenue and more profit. Or, I mean, on pricing, at least, there is no perfect price. It's all about making the best like trade-off based on where you want to go. So if you want to grow fast, then there's different prices are optimal than when you go slower. But behind that target is in the end can be millions of decisions on all kinds of platforms, which are then automatically optimized. I always try to compare this also with the how Google Maps works, right? We used to have the map, and then we say, okay, we need to go left, and your wife said, no, we need to go right. Yeah, we did that, all of that, but nobody's doing that anymore. And something similar is happening in retail now, right? And I think we will look back in 10 years and say, why did we do that at that point, right? So you can, this is the idea, right? To say, okay, you still make a decision on the target, what you want to achieve, but then on product level, the decision is made by the system. And that also exists for marketing to make it even more complicated, because on most platforms, also going forward, so also on ChatGPT and all the other 2 new platforms coming up, you will be able to do ads as well. So not only do you have to predict what is the impact of price changes to your profit after marketing, but you also need to predict, okay, what is the impact on of changing your marketing spending? And this is kind of a 2-dimensional thing, right? If you're very cheap, you cannot afford any marketing, actually. If you're very expensive, you have no conversion. Even if you do marketing, you will not sell anything. So it has to be somewhere in between. And you still need to calculate, like, am I doing any money still after marketing cost? And that's kind of something that I don't see at all in the market yet, I would say. Most people are doing these decisions in silos, and one of the response strategies really is to make these decisions more inclusive in between departments. Yeah, not simulating Black Friday just in pricing and then marketing separately, but simulating Black Friday all together with your marketing efforts, pricing efforts, and also voucher efforts, all of them together. And that's still a big potential. So as a summary, how to react is really to automate, not only automate, because I think automate can also be rules, but also optimize high impact decisions. And especially the ones which are kind of done a lot, like frequently, and which are done in high frequency, with like millions of decisions made per day, essentially. I think in this world, most brands and retailers will have the USP, so where you are better than your competition in the data quality. So rather than in building this all on your own, because yeah, it's just likely that like very big players like Amazon, they're already doing this, of course, and they have enough capacity. I mean, at Zalando, we had like 100 people working on this. Not every retailer can afford that, right? And I think it's not only the question, can you build this system, but it's also the question, is it going to be better than the system of Amazon? Can it compete with that system? And I think that's why most people should focus on data quality, where there is still a lot of work also to be done. And that is both inbound data, where you say my product data is accurate, and I can actually say what is my profit on line item level. for each transaction, but also inbound going, that you understand your consumers using LLM data, which is something also, of course, everybody is still building at the moment. But there's a lot of USP in that as well. Because then this can inform actually your manufacturing and say, okay, maybe you should build a new product, something that nobody else has at the moment, because you really understand what people are looking for. Of course, you need access to the APIs of the AI assistants. Yeah, this other comment was about filters. I think this underestimated today how important these filters will become, because LLMs will use these filters really strictly. And if you don't know which filters will be applied, then there's a risk of your product not being shown that much anymore. Okay, thank you for your attention. I think there's still some time for questions. I see some questions here. One second. How do you see the future of LLMs as an agent for customers in the web shop in B2B? Be it conversational, voice to text, or document processing? So I think this will be first implemented in B2C, because simply this market is very, very big, and this is where all the money is at the moment, right? I mean, OpenAI just got 100 billion, and they have to pay money back to the investors, and they have 800 million users right now, or even more, and most of them are not paying, and they are also not able to pay, and they won't pay because Gemini already said they will do it for free, right? So what they need to is try to monetize these users, and that's why they will really they work heavily on monetizing this through the shopping use case. And for B2B, the market is a little bit smaller, but I also do see the same thing. Not necessarily, but conversational, yes, for sure. I see that. It will be also developed there. There will be LLMs helping, kind of trying to understand what people are trying to buy. And then I think this is where my opinion differs from some others in the market. I do not think this will be fully agentic. The rest is not going to happen, in my opinion, at least, in LLMs, the rest of the shopping. The rest will happen in databases, in software, and what think of it as like Google Shopping, right? It's already a layer on top of all kinds of web shops, and because it has to be deterministic. And I think for B2B it will also be implemented, but it will take a bit more time, maybe. What is my take on price optimization with different prices on web shop marketplace versus in store? Yeah, for me, it's a standard. I always get this question, should we have the same price in each channel? And for sure not, in my opinion. On fashion, for example, just to give you an example, for the same products, your return rate is 30% on Zalando, and it's 60% on Zalando and 30% on Amazon, and the commission costs are completely different. So you can't have the same price on these two channels. Doesn't make any sense. You need to calculate predictively what is my profit if I change the prices, and then you pick the optimal price for your business goal. Yeah, and in-store, of course, especially in-store versus your own website, is always a big discussion. I have a good practice that we do with Galeria, for example, in Germany, is that they, as soon as a customer comes and says, hey, I saw a cheaper price online, you can still give them the cheaper price. It's okay. I mean, that's not a problem, really. I don't know, Sucharita, if you have any other opinions on those.
On the pricing in particular, it's I think it's always the challenge between what's right, what is most profitable, and what is a great brand experience. And typically, kind of if prices can be consistent, it's good for the brand. But to Felix's point, if you offer price matching and that's well known, usually that's a great workaround. Typically, what we will see is for luxury, like the higher end. They don't want to see a lot of, price shopping. They don't want to, kind of get into the business of price matching. So they're going to have universal pricing. For commodities, there's probably a little bit more latitude to do that. but also recognize that, kind of there are going to be some consumers that are unhappy and, kind of their store associates that are always unhappy issuing price matches. But if you're okay with accommodating that, I think that it's important to have, kind of the most profitable prices and the most profitable channels.
Mm-hmm. I have one more question here. My thoughts on top concerns for consumers and merchants with agentic commerce. Are they trust for consumers and loss of customer control for merchants? Yeah, I'm particularly concerned in Europe. The question is like, how can we keep access to the consumer, kind of this first customer access? How can we keep it in Europe? Because if that what I just said is true, right? There will be more conversational shopping. I think it can also happen through an app in the end. Yeah, that's possible. But of course, it's quite convenient, the thing that I said, right? That you are sitting there and you do not even have to open anything. It's just easier. And with Siri, as an example, right? You will do a lot of things very, very conveniently. And therefore, it's very likely, I think, that they will be the trust. They will actually gain a lot of the trust from as being the personal assistant on all kinds of things. And Siri can be monetized by basically opening up Siri to others who are also then kind of are recommended through Siri. And I think this is not 100% clear how it's going to be. And I think this is a bit what ChatGPT was changing in the last weeks with the investment of Amazon, is that it could also be that it's just becoming a marketplace within that assistant, that you then Siri is connecting to your app essentially, and then kind of giving over maybe to your voice assistant. That's also possible. But yes, I think part of that question was that there will be phases, and what we see already, that's absolutely used for discovery today already. And I think the rest simply isn't working that well. I think that's true for many of the things with LLMs, right? Yeah, you can maybe do that once in a while, but it's not working on a large scale. But trust me, they will get it done. Yeah, because there's billions of euros in there. And again, I think the mistake they made is that they tried to handle all of this in LLMs, and this doesn't work. Yes, but once you put it into a software framework and it's really like deterministic and efficient, then it will work. And I wouldn't therefore not call it fully agentic purchase, but I would call it like just kind of a voice interface purchase, right? And then software is handling that. So I don't think agentic is a good term for that, really. Yeah. What's my take on retailers' willingness and ability to enhance product descriptions, info from many keywords to more descriptive natural language? Yeah, I think that's a prerequisite. So you need to, or like it's in your interest to improve the descriptions of your products so that the LLMs are picking you up in the end, right? So, yeah, I think nobody will force you to do that, but it's just more likely if you have very good quality data, it's much more likely that you will be picked up and that you will be in that answer machine as an answer option. And if you don't, then I think that won't work. Then there's one more question. There are lots of Gen AI tools creating descriptions from photos, even more than from product text. But the text should answer questions like, can this fit on my countertop? Yeah. No, I think the real thing is to have like really high quality actual product data. I think also Zalando just launched this 3D rendering, right? I mean, you can imagine that lady that I had in my presentation rendering with a new dress, right? But for make that happen, it's not enough to have a description, an AI description of a picture. What you need is 3D product data, and you need 3D customer data. You need to know how this customer looks like. And if you know that, then you can actually render the customer in the new product, and that will be, of course, a game changer, right, for fashion. Even for returns, will be super nice. But that is not really just kind of a description of text from a picture. It's a lot more than that. You need the 3D data for that. Are the AOEs primarily? You already answered that. Speed. I don't know, we had those questions already, I think. Any more questions? There's one in the chat. Yeah, there's one question. Do I find profits from predictive pricing coming from higher prices or basically reducing wasteful promotions? And I would say this is really, I think the highest benefit is coming from the dynamics, that you're so dynamically able to change and adapt on your targets, basically. Tariffs are changing, and then you're changing your targets, and directly you can update your prices, which are directly live. I think this is the biggest added value. If this will drive then profit or revenues, it's your decisions. Okay, I think we're out of time. So thank you so much for participating in the webinar. Yeah, you will of course get all the presentations. I would love to continue the discussion also offline. If you want to connect on LinkedIn, write me a message, go for it. And happy to answer any additional questions there. Thank you. Bye-bye.